Just a few years ago, you could buy silver for $17 an ounce. 17. And most people laughed at the idea of it ever crossing 50. But here's what happened. Silver didn't just cross 50. Surprised, it blew through 100. It screamed all the way to a brand new all-time high of $121.62 on January 29, 2026. That's a gain of over 600% from its pandemic lows. Curious. So now the only question that matters is, what happens next? Let's look at the data, because the story behind this move will genuinely shock you. This bull run started back in 2020 when COVID stimulus flooded the market and inflation started creeping in. Silver broke $20. Then in 2024, it crossed 30 for the first time since 2013, driven by a supply shortage quietly building for years. By September 2025, it was pushing $44. Then something extraordinary happened. Tariff tensions, a weak US dollar, geopolitical pressure, and a massive short squeeze in the paper silver market all ignited at once. Silver went parabolic. In just weeks, it rocketed past 50, past 80, past 100, and hit $121 in late January 2026. No one saw that coming that fast. But here's the part most people are missing. This wasn't just speculation. The silver market has been in a supply deficit for 6 straight years. In 2024 alone, demand hit 1.17 billion ounces, while mine supply came in at just over 1 billion. That's a gap of nearly 150 million ounces every single year. And the Silver Institute is forecasting another 67 million ounce deficit for 2026, even as global mine output reaches a decade high. Above-ground stockpiles are being drained. When physical inventory runs out, the price doesn't just rise, it gaps up violently. Now layer on the industrial demand story, and this is where it gets truly insane. Solar panels consumed over 25% of the entire annual global silver supply in 2024. Every electric vehicle uses 60 to 79% more silver than a traditional gas car. AI data centers are now entering the picture too, using silver in high-efficiency electrical components. The IEA projects solar capacity to quadruple by 2030. EV demand is growing at over 3% compounded annually through 2031, and building a new silver mine takes 7 to 10 years. Supply simply cannot respond fast enough. The market did pull back hard after that January peak. Silver is trading around $85 today on March 13, 2026, down roughly 30% from the all-time high. Leveraged positions unwound fast. But here's the critical distinction. The physical fundamentals didn't change. The deficit is still there. The industrial buyers are still buying. And the gold-to-silver ratio sits near 60 to 1, which historically signals silver is significantly undervalued relative to gold. So where does silver go from here? Citigroup upgraded their target to $150 per ounce. JP Morgan projects an average of $81 for 2026. Some analysts believe silver could target $175 or higher. Even the bear case keeps silver above $35 to $40, because the industrial demand floor is structural, not cyclical. Silver went from 17 to 121. It's pulled back, and right now the market is deciding, and is this a pause before the next leg or the end of the run? The fundamentals say deficit. The industrials say demand. The charts say we're still in a historic bull market. Whether silver reclaims 150 or consolidates at 80, this metal is no longer flying under the radar. The question is, are you watching it or are you still sleeping on it?